how different are the views that we got from Fed Governor Myron versus Fed Chair Jay Powell?
It's hard to compare the two of them because of the position that Powell's in, and he didn't really say anything different than he did last week. I can't account for what the stock market is doing, but the bond market and the futures markets in terms of Fed rate cuts haven't changed. He basically just said, status quo, we're looking at the data. Steve Myron obviously made the case that we should be cutting significantly. There's much more of a contrast between him and what we heard from Raphael Bostic and Alberto Musalem yesterday than there is between him and Powell. And I don't think you can really take anything away from what Powell said today, because if you look at, he spoke last Wednesday, and since then we've had one jobless claims report and a couple of PMIs, and that's the only economic data. So there hasn't been anything that would change your view one way or another, and he didn't change his view.
You said you can't comment on the equity market, but I'm still going to ask you about it, Mike, because at 12:58, this headline crossed. Jay Powell saying at 12:58, some asset prices elevated versus historical levels. By many measures, equity prices are fairly highly valued. And since then, we've actually seen the S&P 500 move lower and sort of stay lower. Is it rare for him to comment on equity price valuation, equity valuations?
And maybe that's the one thing that people took seriously out of this. It's not that the Fed is going to do anything about it, but it's sort of a jawboning warning. This is, it's not the same level as Alan Greenspan and irrational exuberance, but it is.
Is it the Powell version of that?
Maybe a little bit of a warning. But he also goes on to say, and others on the Fed have, that we don't really have any major financial system dangers out there. And so I suspect the equity markets will get over this and come back as soon as NVIDIA sneezes or something like that. They'll start buying again.
I mean, there's a lot of it to do that. I think so many investors, and we've heard from various market watchers, that they expect a bunch of rate cuts. Is it that Jay Powell's not committing to more rate cuts? We've got a couple more meetings this year. He's not.
Well, people are always wanting the Fed to promise them what's going to happen. It's much easier to invest if you know exactly what's going to happen in the future.
Funny how that works.
But we walked out of the press conference, the Fed decision last Wednesday, with the markets expecting 2 more cuts, basically because that was what was in the dot plot. The SEP was a little more iffy on it, but that's what the market's set up for. And Powell did not disabuse that. If the Fed doesn't like where the markets are, they find ways to sort of point that out and to steer them in the right direction. And he didn't do any steering today. So one can assume that their view is we are leaning towards rate cuts unless something happens to talk us out of it. And that's what we have to wait and see.
Rate cuts as a result of a job market that he said is not solid anymore, and also saying we're in a low fire, low hire economy. Job creation has dropped very sharply. Rate cuts because of that?
Yeah. We don't know. Yes, that's what they look at the labor market and especially unemployment as a signal for what the economy overall is doing, because obviously if companies are seeing margins compress and they've got to keep them up, they might let people go, and then people don't have money to spend and the economy slows down and you get into this the whole recession scenario. Nobody's talking about recession anymore at this point, but that's what the Fed worries about. And so they're thinking that they're better off propping up the labor market right now because they think inflation is going to gradually dissipate. It'll go up some more because of tariffs, but they're not thinking it's going to be a huge impact. The out there leaving is we could be wrong. Right. So if that's the case, we don't want to commit right now to say we're absolutely cutting rates, but we're leaning that direction.
So this rock in this hard place. So if inflation persists, Mike, and we do see continued weakness in the labor market, or things steepen in terms of the labor market coming undone, what does the Fed do? What do they fight? What do they try to improve? Which mandate do they pay attention to?
That's the conundrum. What they have said in the past is what you do in that situation is you look at the one that is going to be the hardest to fix, and you deal with that. But in this case, they don't know. we haven't had a situation like this with tariffs since, Smoot-Hawley. And so they're kind of making it up as they go along. And they're going to have to be flexible is kind of what they're trying to tell everybody. Don't get too comfortable one way or another, and let's see how this goes. And we can act on either one.
We're going to talk about President Trump at the UN in just a moment. I was listening to you on Bloomberg TV just, I think, in the last hour or so. You noted that there was some politics in his comments today, meaning Fed Chair Jay Powell, something about a cheap shot. But what do we need to know here?
Well, there were a couple of remarks. We've had people, especially Governor Myron and the president in recent weeks, talking about the Fed getting way out of its lane and doing a lot of things that it shouldn't be doing, and they should get out of all this stuff. And Powell put a paragraph in his speech today saying we had to do these things because in 2008 and then with the pandemic, the world was going to blow up. The financial world was going to blow up, and we couldn't let that happen. It's not that we wanted to grab all this. It's that we had to do this. And then later on, he was asked about whether they're political, kind of the standard question they get. And he gave the standard answer of, no, we just do what's best for the country. And then he added, the people who are saying that are taking cheap shots, which the first time you really see the guy get a little annoyed at what's going on out there. He is always under control, but he just let that one slip.